Hi, good evening. This is Lewis Moore, former state representative and insurance committee chairman, and 35-year property and casualty life and health licensed agent. And we're talking to you from Edmond, Oklahoma, and this is Oklahoma Insurance Watch. Thank you for joining us. And tonight, we're going to look at some things on why we have insurance and then look at reviewing your homeowner policy. So I'll give you a chance to round that up and get that in front of you. And that way you can kind of go through yours at the same time. I'm going to go through mine. And then if you have any questions at all, or if what we talk about spurs additional questions that you'd like to have answered, please let us know so we can take care of those for you. And if you have any claims, we have somebody who is a public adjuster and appraiser, and we can take care of those needs for you as well. But please do call us and let us know how we're doing. And if you have any questions whatsoever about any kind of insurance, please do not hesitate to shout at us. All right. So why we have insurance. We have insurance to protect against uncertainty. Insurance helps us as individuals and businesses manage the financial risk associated with unexpected events such as accidents, illnesses, natural disasters, or theft. So we're a wind and hail state, and we became a wind and hail state about 8 years ago. And so before that, we were when we were not a wind and hail state, our property and casualty cost for insurance was much lower, but the insurance carriers took a pounding. Now Oklahoma is in the top 3, 4 states. Kansas, Nebraska, Oklahoma, Texas, South Dakota. We're in where we get hammered. And part of that is just geography. We are in between the Gulf of America and the Rockies in Colorado. So the cold air coming down from the mountains, when it meets the warm, moist Gulf air, trouble can happen. So typically the big tornadoes that we've had, the big F5s and things, the really terrible ones, no matter even if it's a 1 or a 2, they can be damaging. But the really bad ones, they've happened around 5 o'clock in the evening. Well, 5 o'clock is the heat of the day. The sun has managed to heat the asphalt, the concrete, the core of the earth, the crust of the earth, to the point where it's retaining that heat. And so when the cool air comes in, and it tries to go, the warm air goes over it, and it causes a lot of trouble. So it can cause hailstones to occur. Hail is small, and it just keeps shooting up and down, and the clouds getting bigger, accumulating more moisture, and becoming bigger and harder and sharp-edged many times. So it can really do some damage. So that designation of being a wind and hail state immediately cost us 50%. So the insurance carriers increased the premiums 50% to catch up for past claims and prepare for future claims. Much like hurricane-prone states south of I-10, Interstate I-10, down from like Houston over to Florida. You know, that's a lot of Mississippi and Alabama and Louisiana and Georgia and Florida. Well, the years where they do not have damaging hurricanes, as carriers do. That way they're ready to go when the big bad years occur. So, and that's kind of what the wind and hail states have needed to do. And I hope that that's what they're doing, besides what I see on uh, reels where the Senate committee is hammering insurance company executives for not paying claims. So um, that's not the good side of what we're talking about. What we want to do as individuals, we want to make sure our coverage is squared away, that we have adequate coverage, and then we expect insurance companies to pay and pay promptly or within the limits that are specified on the policy. And if they don't, we have two governmental entities to help us. And really free. You have your state representative, your state senator, your governor, but the primary person that rides point on this is the Oklahoma Insurance Department and the insurance commissioner. They have more stroke. But just to make sure that your needs are being answered, you should know ahead of time who your state rep is. Them, or if you live near Oklahoma City, or you make the effort to come here and to the Capitol, you can go to the Capitol, go to their office and talk to them and let them know what your needs and concerns are. But also, um, the insurance commissioner is the primary person. Then, if they're, even while they're working on it, the attorney general's office has a way to, because that's consumer fraud. So if they're really hassling you or not paying the claim, you can certainly let them know. And the attorney general that we have, Drummond, he's pretty tough. And between those three entities, we should be able to get this thing taken care of. You shouldn't have to even do that, but sometimes it boils down to um, activating things that we shouldn't have to do because we have a legitimate policy, and we should be able to depend on that to take care of us when it comes time to a claim. So, but that's a good thing to know. Um, So what we're going to do is we transfer risk. That's why we buy insurance. We transfer the risk of us having to pay and meet the cost of 100% of it, like you might do on some smaller things with an emergency fund. Your emergency fund shouldn't have to be so big to replace your house. I mean, the deductible or co-insurance might be pretty high as it is. So all those things are negotiable, okay? When you meet with your agent or any agent, in the event that you have one and you're not satisfied with that one, or you want to do an annual review of your coverage, and you might want to see what other carriers are offering and what other carriers um, are charging, because there's a number of different discounts that you can get. So we'll talk about those as well. 1 in 7 homes in Oklahoma are reportedly uninsured, not even underinsured. Like we have an automobile coverage, we have uninsured motorists, we have underinsured motorists. Well, I'm talking about just homes, 1 in 7 in Oklahoma not being insured at all. And so, I mean, home insurance has gone up because of the wind and hail. Um, but according to the Insurance Information Institute, III, and other industry reports, it's been noted that around 10 to 15% of homeowners in the United States may not have homeowners insurance. That is a lot. So how many are underinsured? Well, you can almost say I don't know how many. I'm not even going to fathom a guess, but it's going to be a lot because if you're not reviewing your coverage every year and we live in a time with inflation, then you're probably underinsured. If you have an ACV policy, actual cash value policy, and you're not keeping up with the limits correctly, then you're going to get hurt in a claim. Are you uninsured? No. Are you underinsured? Yes. If you have $100,000 house and you have 80% coinsurance, which is kind of the industry typical amount, the industry average, and you only have $60,000 of coverage, now, instead of, you need to have 80% to get 100% coverage. If you have 60,000, that's 60%, you're going to get after the deductible, if there is any deductible on top of the coinsurance. But due to the coinsurance provision, you're going to get 60% of your claim covered. So if you had a $10,000 claim, you're going to get $6,000. If the whole house is destroyed by fire and you had 60%, you should have had 80%, then you're going to get $60,000. And that may not be enough to get you in the like, kind, and quality house that you had once had. So, and I don't want you to be disappointed. So if you need help with talking about that or discovering that or understanding that, then please, you can call us, but please, the first person you should contact is your current insurance agent. I had an insurance agent also for years. He left the business, retired, and I accepted and worked with the person who took over for him. And but there were some concerns that I had about not having enough coverage. And I kept saying, I don't think I have enough coverage. And they said, well, there's a provision in here that is kind of a disaster provision, meaning that if there's a big storm, a big wildfire that destroys a bunch of houses, or a tornado that happens, like happened in Moore, where a number of houses get destroyed, that is going to increase the cost of homes in that area because of the lack of contractors to be able to work on them, the lack of materials, the fact that the wholesalers and retailers that are selling the items necessary to rebuild the home are not capable of doing that because of the rush on the materials, so that they're going to charge more. Well, we have in the state a provision that says they can't charge more than 10%. But who knows what's happening when the builder's wanting to get stuff and what can happen. So the insurance companies put like 125% provision in a lot of the policies so that they're willing to pay an additional 25% to make sure that your home is paid for and taken care of on a timely basis. And that's typically within a year to 2 years, because there is another provision in the policy that additional living expense that pays money for you to live in another place while your home is getting repaired or rebuilt. Okay, that's a little bit of a tease on what we're going to do as far as the home owner policy review. All right, so why are people uninsured or underinsured? The cost of insurance has gone up, not just because we're winning hail state, not just because we're inflation, but also because um, the cost of homes in certain areas, and as population increases in the town, the cost can go up because you have more buyers than sellers. All right. Roofs. We've talked about the roofs. Oklahoma's I'll say we're number 2 in damage due to wind and hail. And like I said, we talked about this at least one other time. There are class 3 and class 4 roofs. They don't always say that. A lot of times that's the normal lingo for a commercial property roof. For a home, they may not use the homeowner insurance carrier that you have for your home. They may not use that lingo. They may not use class 3 or class 4. But if you get hail resistant roofing, you should get a discount because it will either be a class 3 or class 4. And if they can produce a certificate that says replacement or that says hail resistant roof material were used, that will help you in getting the discount. So the company that's paying for the roof repair or replacement after a wind and hailstorm, they will give you that discount, but they may not have access or need the certificate. But like I said, if you change carriers, they're going to want something that proves that. Okay, so try to get that and keep that with your policies in a binder. So if you don't have a binder, get one to put your 3-hole punch in and put your policy in there along with other communications that you get from the carrier. Put those in that binder as well. And like a certificate that shows that you're a class 3 or class 4. Class 4 usually gives you a better discount. The carrier that I first had, I got a 50% discount, but since wind and hail, being a wind and hail state was 50%, that just basically got me back to neutral. But a class 3 roof might be 1 or 10 to 20% discount. But no matter what, that's equates to a lot of money these days. All right. Now, I've got a friend who owns some rental homes, and I called him up just to chat with him last week, and he was on his way to Tulsa to a roofing supply company that sold the metal roofing systems. And he wanted to put a metal roof on because of all the wind and hail damage that we were getting. And so it was costing him a lot of money to replace these roofs. And so he wanted to put a metal roof on there, which is kind of like the final um, execution plan. You know, if you execute the putting of that roof on, you're really going to be good. It's better than tile. It's better than class 4. It's better than hail resistant. Metal roofs are definitely hail resistant. And most of them are made with good enough metal not to dent or show damage. And then they also come with clips to attach them to the trusses and such to ward off the uplift. Okay. And there's also flashing that they can use to help prevent the wind from coming up under and pulling the nails up. All right. So when we're talking about um, there's ridges on your home, there's the edges, and so we want all those things to be protected against uplift. So a good roofing contractor will do that for you. And no matter if you're needing one now or not, if you're able to get a contractor to give you a quote on what that would cost, so you have an idea, and then ask your carrier, your agent, if I have this kind of roof or this kind of roof or a class 3, 4 metal roof, what is my homeowner policy going to cost? That way you have an idea of whether or not that would be a good buying decision or not. Okay. Um, Now, commercial roofs, they get the discount if they have a UL 90 roof. Their UL 90 roof is the equivalent of a class 4 roof, but that's also accounting for uplift on theirs. The roof is the big deal on a home. So the most important part of the structure against weather is the roof. Okay, so if a fire breaks through the roof, you typically have big trouble. So, first of all, if a fire department cannot get to your home within 15 minutes, you're in trouble. If you live more than 5 miles away, with the number of street lights, and stop signs and that kind of thing, it can take a while for the fire trucks to get to your home. If you don't have fire hydrants within 1,500 feet of your home, that can cause trouble and be more expensive to insure also. So take a look at those things, and even on the fire hydrants, if you have the opportunity, ask your fire department if the fire hydrants that you have in your neighborhood or that are close to you, like I've got one that's a little bit more than 1,500 feet away, but it's not close enough to help me as far as the discount. But ask them, hey, how old are these fire hydrants? Because you can see some fire hydrants that are really old. Are they up to date enough to allow for the attachment of the hoses and the connectors that they have nowadays? Um, but just ask them, and that they'll be happy that you cared to ask them, and then sometimes that's a big deal. All right. Also, some roofs, like I think my roof's 8 years old or so, increased durability. There's some roofing systems that have longer lifespans and require less maintenance, providing better long-term value. And your homeowner's insurance is not to replace your roof every 10 years. That's not what it is for. But it seems that um, if you see a neighbor getting a new roof because of a storm, everybody's going to want a roof. And sometimes it's not because of a storm, but you can tell if if a roof in your neighborhood or something when you drive by a home and you see it's rather smooth on the roof, there's not as much detail on it, or um, difference in the thickness of the shingles. Okay, then they're probably more like a 20-year roof, okay, or a 15-year roof. A 30-year composite roof that's hail resistant is going to be thicker, 2 to 3 times thicker. It may or may not have um, fiberglass, or it may have recyclable rubber to a certain extent in them. And if they do, that's really a good thing. Anything that allows for the hail hard substance to bounce off is a good thing. Okay. Um, and there are people in Oklahoma City that make those roofing systems, and make those shingles, so we don't have to go very far to get them. And making things in Oklahoma City is a little bit better cost wise, also because we can do things for less here. Um, do you need? Okay, so now typically when you put a roof on your home, you don't typically want to put the roof system over the old system. That's why most of the time you see the crew up there taking the shingles off, and it just makes it look better typically than putting the new shingles over and on top of the old roof, the old shingles, okay? Um, all right. So if you have found your, I've got some other things, but I'm going to go, let's go on to our homeowner policy. So if you have your policy, the first pages where you have the numbers, where you have the premium and the discounts and the insured property details and that kind of thing, a summary, those are your declaration pages. And so you definitely want to make sure that you have those and that those are up to date. Somewhere on the top of the policy should have an effective date, like mine's effective June 30, 2025. So you want to make sure it is up to date. If you don't have one that's up to date, uh, there should be a phone number, a name, and a phone number of agent or agency, and then you should have your policy number on that, and call them, email them, and follow up and make sure that you get something emailed to you or mailed to you, or go by their office and say hello to them and try to pick something up from them so that you can get this thing seen and checked out. If you are a mortgagee and so there's a lender involved, they're going to need a copy of the policy also, and they just get that automatically as an additional insured on the policy. So they're going to get that, and they're going to take the money necessary to pay the premium from your escrow account. So if you have the escrow account because you're paying somebody like the bank or lender each month for your home, part of what they're doing is collecting money for the property taxes and money for the insurance policy. So as they're collecting it, when it comes close to the effective date, as soon as they are allowed to pay the premium, the carrier will go into, will ask the lender for the money and they will send it to them. So sometimes it's 30 days, sometimes it may be a little bit longer than that, but they make sure that they get the money for the policy so that it's enforced upon the renewal date. Okay, so if you're thinking about checking out your policy and maybe changing it to another carrier, you're going to want to do so with a little bit of lead time, because it takes the agent a little bit of time, and sometimes they have to send out risk management person to check out the home to make sure the roof is okay, and make sure everything's up to standard, um, so that they can insure it properly and not be buying a bad risk. Okay, so you want to make sure if you're concerned about your policy or the agency or the agent or whatever, and you want to check it out, do so about 90 days ahead of time. Okay, give yourself at least 2 months lead time before the 30-day renewal period hits, and you'll be a lot happier that way. All right, so there's payments in installment. You usually get a discount if you pay it in full. And so if you pay it in full, definitely if you have an escrow account and you've got a mortgage, they're taking that money in full to pay the whole thing in one fell swoop. So you're definitely getting that uh, pay in full discount. Okay. If you're not, you can kind of do the same thing by building up the money in like an emergency fund so that when you have the renewal come in the mail, that you're able to pay it. And for mine, I think it was like $800 discount, but you'll get a discount and it'll be worth doing that. So if you think about how much money it costs you for your policy and the discount and what that would need to be what you would need to get as far as interest on that money, you're not going to be able to get that. How do I get $800 in interest on the full premium amount? I can't. There's not very many things that are risk-free that you can make that kind of money. So that's a good thing. Then there's things like protective devices, having um, a smoke alarm, fire alarm, security alarm, those kinds of things that are active and go directly to the fire station. Those things will get you a good discount. If your claim's free, it's usually, mine's like 5% discount each year if I'm claims free. And sometimes you can get $100 more a year also. Then if you've been a long time or multiple year insured of the company that you're going with, you can get a discount. Sometimes they call it a loyalty discount, multi-year discount. Okay. Then if you have multiple policies like your home owner policy, your home policy, and your cars there, you can get a multiple policy discount. Well, that's almost as much as paying the thing in full. The loyalty discount is more than paying it in full. And if you have, like I have a hail resistant roof, that is like 30% or so off the policy for having a hail resistant roof. Then, now, can that drop over time? Because my roof is 8 years old. Well, if it's 8 years old and it still looks really good, it still looks thick. I have granules that come out every huge rainstorm like we've been having, but it still looks really good. It's still working like it's supposed to be doing. I haven't been able to see any appreciable damage from hail, so all is well on that. And if you start seeing your tiles have dings in them, and you can see them from the bottom, from ground level, you need to call an adjuster to come out or appraiser and check that stuff out for you. You don't always want to call the agent and tell them, because many times they'll notch that as a claim, and thinking that you're wanting to check it out and see if there's a claim available for you to file and get paid on. But I'm just talking about, you're doing this just to see what the status is of your roof. So a lot of times it's better to have an independent person look at it, and an independent appraiser can do so without um, without any hassle to you. And so the person that helps me with this podcast is an appraiser, and a really good one. All right. So there's insured property. And so first of all, you have your house. So what is your house insured at? So there's two ways you can insure it. It can be insured as replacement cost, which is the better one and more expensive, or you can do it as actual cash value, which is ACV, actual cash value, where you need to have it insured at whatever percentage they say. So in the policy, it'll say actual cash value, you need to have this insured at 80%. 80% is this amount. And if you do and you meet that and you have a claim, then you're all good for 100% of the claim to be managed and paid. Okay, minus any deductible that you might have. And I talked about deductible because deductibles on a home used to be, like, a long time ago, probably $250. Then it was $500. Then it was $1,000, and that's not been all that long ago. Then it was $1,500, and then after the wind and hail calamity, um, then now it is a percentage. So do not be surprised when they say, hey, I've got a new policy for you. We're switching everybody over to this. It's a better policy. And they typically give you one or two things as a bonus to accept the 1%. But now everybody basically is charging 1%, or most carriers are, for as a deductible. So what's that mean? It means on a $100,000 house, 1% is 1,000. $200,000, 1% is $2,000. If you have $1 million house, 1% is a lot more. Okay, so, but they've gone above 1% now. So now most people are looking at 2%. Well, mine isn't 2%. Mine's still a flat amount, but it's 7,500. Well, that's a few percentage points. So instead of telling you a percentage, which would end up being less, they give you a flat rate amount, a flat amount. So do not be surprised that you get that. And if you haven't been communicating with your insurance agent or carrier, you may be surprised if after 3 years you finally sit down, because not everybody looks at their policy. They just take it for granted a lot of times, or their spouse or somebody else is handling that for them, and they just drive on. They don't consider it side by side and looking from year to year over the last 5 years what's happened with their policy. And so if you haven't, stop and make sure you look at it and look at all the provisions and go over that with your agent or one of the people that work in the office, and go over each and everything with them and read, especially the deck pages, read those things and have them read them so that you know that you're on the same page. You're looking at yours, make them look at theirs and read those amounts to you, and then cross check to make sure that those are what you're wanting. And then ask questions, okay? If you think because you go on Zillow or realestate.com or realtor.com that, okay, my house is worth this much money, that's how much money I need to see, coverage I need to see in my policy. That's not exactly how it works, because they're just talking about replacing the home. They're not saying what the lot is worth or what the acreage might be worth, because that's a separate sale. If you that's a separate value, okay? And so if you leave, you say, okay, my house is burned down, I'm just gonna use this opportunity, I'll take the money and leave. They're not gonna just, most carriers are not going to give you the full replacement cost so that, okay, you don't rebuild the home, you're just gonna take the money and leave. Well, they typically are going to pay whatever the actual cash value amount is. How do they come up with that amount? It's typically going to be 1% deduction each year. So if your home is 20 years old, they're going to deduct 20% off the replacement cost, and that might be the amount that they give you. Might be, because I'm not saying they haven't, if they haven't deducted, the deduction and that kind of thing. But there may be some other twists and turns. So that is a question that you should ask your carrier and the agency representing that carrier. Okay, hey, there was so much damage here, like the Moore tornado, I just want to leave. And there's, things are different. People died or whatever, and so you want to leave. Try to negotiate the higher amount, but I'd just be prepared to have to negotiate for that, okay? And then if there's a public adjuster, somebody that can help you with that, ask them, call them and ask them and see if they can help you with something like that, okay? It's always good to get somebody that's a wise, knowledgeable individual to help you that's in that industry, okay? Now, your insured property, you have your house, that's one thing. And if you look at Zillow, and Zillow says my house is worth 400,000, and you look at your policy, and they're going to do it for a lesser amount. They're gonna say, okay, my dwelling protection, my liability on that, on the dwelling protection, the amount that they're gonna pay me is 350,000, something like that. Don't sweat it, because, um, just make sure that, work that out, because Zillow or real estate realtor.com or something, they're factoring all the other stuff in there, the land, other dwellings on your property, all that stuff. So you'll be really surprised. But if work that out with the agent, okay? Because you may get them to increase a little bit, which does increase the premium, but you want to be happy. Most people, most neighborhoods that have undergone mass reconstruction, the houses are brand new, new materials, new codes, new permitting, and the homes are even typically bigger and nicer than what they had based on. Okay. No, hey, all right, let's go ahead and call it, because I need to get my cars in. Okay. All right, good. All right, there is a tornado watch, and it looks like it is coming into northwest Oklahoma City. So I'm going to allow you to get your wind and hail uh, property squared away. So if you haven't moved your cars in, you need to do so. Please do so. Batten down the hatches, and we will talk to you next week. We'll finish up. Thank you very much. Take care.